Manish Chokhani, Director of Enam. Manish, welcome back. Thank you for joining us.
Thanks,
You're looking slightly different to me this time, is it?
It's the holiday glow. Post-holiday glow.
Okay, what a comeback it's been.
Absolutely, and you said it right, that whatever government comes to power, you're basically a function of what's the global setup and what's the earning trajectory over here. And that so far doesn't look like it's going to change in a hurry just because the government has changed. So of course the event risk hopefully is out of the way. But I guess 10 days from now we'll be looking forward to what's the monsoon like, who's going to get the portfolios, who's going to be running the finance ministry, what's going to happen to interest rates, and then we'll take it from there.
2014, I remember when we met, and I think we met on the day when Prime Minister Modi got elected.
Yes.
The mood has changed. I remember your comments. India has moved decisively to right.
I did say that, and I also said it then subsequently that I realize now that it was foolish on my part to think that a country where 80% of the population really doesn't have basic income, to expect that the government will worry about the 2 and the 18 of India which is consuming is perhaps a bit naive. And you didn't really have the political freedom, given also the setup in the Rajya Sabha, to achieve what I still think this government ought to now be doing, is just massive privatization to create the fiscal space for themselves, to spend money on infrastructure, to spend money on skilling, to create that whole urbanization and jobs and all of that. So I'm still hopeful on that. But I don't think I'll be making statements like we've gone to the right
But will
anymore.
that really be a priority once the government comes back to power?
So I do think that given the setup now, assuming these polls are correct and assuming this is the setup which comes back to power, one of the things I do feel strongly is that the way you solve the agrarian crisis in India is not by putting subsidies into the farmland, it's actually by urbanization. Because only if you can move people off the farms to the cities and the towns, that's when you'll solve the crisis there. Because you cannot have one country in the world where 70% of the population is on the farm, whereas in the whole world only 15% of the population, if that, is on the farm. So you have to get them off the farm. And the way to get them off the farm is, like I said, you have to put them into cities. And that's what will create jobs as well, because there's so much of build out to be done, whether it's urban infrastructure or it's actually creating factories and getting these people on there.
How does one judge that the slowdown in autos, even in categories like consumer staples and durables, is temporary, or this is a structural slowdown? Because we've not seen that end of the market or that end of the economy perhaps seen a gut-wrenching slowdown for a long time.
So it's been one of the disappointments again, that India, when you draw a bell curve, in most countries of the world you find the income is distributed. There are very few poor people, very few rich people, and a very bulging middle class. And the India skew is very dramatic. So there's, like I always say, 2% of Indians have maybe a $25,000 per capita. 18% of Indians have like a $3,000 per capita. But 80% of India is actually at 300. And that's why your average is at whatever 12 or 1400 or whatever where we are. And unfortunately for the last 10 years after the global financial crisis, the real wealth effect hasn't taken place in India. And also the rupee, if you remember, in 2008 was 40 and it's now 70. So not only have you suffered a decline in real income in that sense in India, you haven't created fresh jobs to create a wealth effect to trickle down to the remaining 80% of India. And therefore this whole policy making now has to be geared towards, I'm hoping, stronger rupee, lower interest rates, and a lot more urbanization and factory oriented jobs, because this myth that India can just transform itself from agrarian to services economy without going through intermediate stage, I certainly am not a subscriber to that.
We were talking with Alistair Newton as well a short while ago, and he said that if he wanted to see some sort of an incremental change, it would also be with respect to the finance ministry. On that front, when it comes to fiscal and policies on that front, is there anything in particular that you were displeased with, or that you would want to see some sort of a major change?
Look, I mean, politics is the art of doing the possible, and you need a politically savvy finance minister. And I think due credit has to be given that the government was fiscally responsible. This government did bring in things like GST, which were, and I think is still transformational for the economy. So you can quibble over that, like I always felt that they should have been more aggressive on privatization, for example. Or you could have directed a lot more money towards infrastructure spend. But it's a question of then political choices the way you make. I don't think if anyone is put in that job, they might do something very different from what the incumbent finally does.
If I, just a follow-up question, Aisha, on that, if you look at the boom period for India, it came at a time when the political mandate in a sense was fractured between 2004 and 2008 or 2009. But that good work coincided with a global boom and the good work what NDA did, right? What are the chances that NDA 2 may enjoy the good work of NDA 1?
You have to be very optimistic about it, because this is a period of demographic dividend where India should be at its prime. To be at its prime, you need people to be gainfully employed. If the narrative in India is that you're getting jobless growth or you're getting people becoming really delivery boys or what I call disguised underemployment, that's not going to lift your per capita to a $5,000 benchmark, which is what we should aspire to. And I also feel the last 5 years may have been a cleanup period in some sense to get rid of all the hangover of the previous 5 or 10 years. But also now benchmarking from the previous 5 years, I think it will probably have to change to benchmarking against the best in the world. And again, if we draw back, when I started my life, India and China had parity in terms of per capita income, and today they are 6x of us. When you talked of the structural versus cyclical in auto, for example, in the mid-90s, India and China sold 1 million cars each. Today we are barely inching over 3 million cars. China went as close to 30 million as possible, and the average car sells for probably 4 times or 5 times the price of the average car in India. So you have like a 40-fold expansion of that market, and they're not much different from us in terms of population, brain power, and I would argue our our political democratic setup actually should make us more enduring and more longer term sustaining as a country.
As opposed to
so that time will also come.
Yeah. You know, since you did talk about this global backdrop, all the pointers that you're talking about, in the backdrop of, it's a ticking time bomb that we're sitting on. The US equity bull market run has lasted us a good 10 years now, and there is that corporate debt which is on the rise. How do you correlate the two? I mean, is that bubble going to burst anytime soon? Because for the past 2 years, we've been, wondering, are FANG stocks going to crash ever?
No, I mean, everybody, Manish, from Ray Dalio to Howard Marks, people we've interacted with from last 2 years, they've been on the channel and they've been saying the same stuff again and again. Are we looking at something which is different, or it's a matter of time a blow-up is going to happen?
So I don't think any of the gurus in the world question whether it will happen. The question is on when it will happen. And if you think of it mathematically, the US debt to GDP is 350% of GDP. So if interest rates go up by 1%, that's 3.5% of GDP. Their GDP growth is in 3.5%, which means you have a profit recession over there. Therefore, each time the Fed says, I'm going to raise rates, the market goes into a swoon. And then the Fed draws back and says, okay, let's release some more money. Question is, at some point, someone in the markets in their wisdom will wake up and say, this is not sustainable. And remember, US is still the most dynamic economy in the world. We don't discuss Europe anymore because nobody knows what numbers come out of Europe anymore. We don't discuss Japan anymore, which is fundamentally it is dead. And I think it was, it wasn't Ray Dalio, to someone else who said Japan is like a bug in search of a windshield. Something has to go wrong and then it just blows up over there. And that's why there's money just leaving these countries in trillions of dollars, and we are able to attract, unfortunately, maybe 100 billion. So we get happy if you have 15-20 billion of FII flows, but that's like the trickle end of a kind of global wash of money which is going across the world. And even for us at $2.5 trillion, with a 5% trade deficit, 100 billion is the basic need of this country to attract by way of FDI. And we get a lot more in private equity than we get in FII flows. We should get a lot more by way of debt flows. Having said that, we have so much of stuff available to sell, and we've spoken about this as well in the past, that if Mr. Ambani is willing to sell his refinery, why is the government holding on to HP, BP and IOC? 10 years from now, if electric is the future, why do you want to hold on to a refinery? Same thing with steel mills. If SR and Bhushan and all are finding buyers, what is so sacred about holding on to Steel Authority of India and so on? So there is so much capital which is wrongfully deployed in our country. If that can be released, you can create new assets at one-time book, whether it's roads, whether it's airports, and then you can sell them at 2.5 times book, and you create a virtuous cycle in this country.
Okay, so my next question, it's a bit of a realistic question. Let's work with the assumption that what we want, we don't get it, which is that PSUs are not privatized.
This time I would beg to differ. I think this government, you now have the political space to do it. I think the setup in the Rajya Sabha may also turn out to be very different. Like for the first time, they made statements like we will get rid of Article 370. That was a sacred holy cow for 70 years. Similarly, privatization was, it's not that it hasn't been done. The first NDA regime under Mr. Vajpayee had in fact initiated that. And if you think of it, how do you ignite animal spirits in the economy? If you think of it, a VSNL had gone to Tata, IPCL had gone to Reliance and so on. And the previous administration may have got a bit spooked with the Soot Boot Ki Sarkar narrative, and maybe that doesn't hold true anymore.
No, I completely agree.
If you can go down that path, and the need of the hour is that.
Okay.
So you could have argued 4 years ago, maybe I can still get by, I still need to clean up the banking sector. You need massive infusion into the banking sector. And again, I would think one of the big trades which will happen in India will be when you have to start putting these PSU banks together.
Okay.
It's the most hated space. Nobody likes it. No one has the courage to go and buy it. But you cannot have the whole 70% of India's banking sector just decaying away.
So you're saying there is a case for at least beginning to nibble into
They will have to
start.
They will have to take action there. So while you've done your BOB and other mergers,
that had been taken as well.
So they've done it in SBI. They've done it in BOB. I'm guessing it will happen in.
I'll take the liberty of my career, and when I started my career as a house, Enam was very bullish on PSUs.
Sure.
99-2000, they were bombed out, SCI, NALCO. Sure. Do you see that kind of an,
So in some spaces, yes, that's true. And it's the most hated sector. So as a contrarian, it's the place you look. Because what you're rightly pointing out, at that time, I remember BEL used to be 50 rupees and it was selling below cash on its books.
BML was 20 bucks.
BML was 20 bucks. Container Corporation was like 100 rupees. SBI itself was like
170 and then bonuses.
There is, I mean, the market is like a season, right? There is a season for every fruit in the market, and something will happen.
Are you fully invested?
Pretty much.
Okay.
But we are always fully invested. So
no,
I don't understand debt. Like, why would I lend money to someone whose equity I can buy? So
no, what we're trying to gauge here is that since we don't get time to interact with you so regularly, we have to get the sense out in whatever little time we get. You're not sounding very optimistic about the global setup.
Yeah, I mean, look, I don't have to take a position and say I'm some bullish person and I have to lead the market in any direction. But fundamentally, I'm an optimistic person. Fundamentally, let's say there was gloom and doom in the world. Let's say there is a terrible government in India and I get HDFC mutual fund at 1200 rupees. Do I really care about the world and do I really care about what government's in place? I'm going to buy it. If HDFC Bank falls to a certain price, so it happened in fact with Bajaj Finance, right? In the last NBFC crisis,
went down to 1900.
It went down to 1900. And within what? 6-7 months, it's virtually a double.
No,
do you really care about that?
We spoke about data. We spoke about how data is going to change the way how Indians would consume, and that was a mega trend. Anything else which could be called as a mega trend from 2 to 3 years, because you really identify these spots and then we fill in the colors.
It's probably a longer discussion to have. Maybe today people are more interested in the polls, but I do think the Indian setup has to change fundamentally. So while we keep saying go away from consumption or the financials and buy the infra and the industrials, reality is the world has gone away from these. Nobody is buying GE and Siemens globally, even at sub 10 multiples. Nobody is buying pharmaceutical stocks. J&J and Pfizer you can buy at 15 and 16, and our stocks are at 25, 30 being generic stocks. So fundamentally the cast of characters in the Indian sort of corporate sector has to change. A lot of it has happened in the private equity space. But even their valuations may or may not be sustainable, and yet you do see occasionally you will get a windfall, like a Walmart comes and buys into a Flipkart at fantastic valuations. Hopefully you see some of that happening with the deal which is spoken about with Reliance, where they can deploy capital and then redeploy it back into Jio and so on. But the architecture of our corporate sector, I think, is going to change fundamentally.
So are you saying that the markets are still very expensive?
I think if I have to look at it as an aggregate level, the market's not cheap. The market still, in my view, has been pricing in this whole boom that, like we talked of that income curve being a J curve in India, that 2% of Indians own cars, 18% of Indians own motorcycles, and 80% of India is either walking bare feet or they're on cycles. So if you're sitting in an auto company and let's say you're on a two-wheeler, Hero Honda may look X growth today and it's a 12-13 multiple or whatever. But if 80% of India still has to get on a motorbike, it may still be a growth stock. Then you start worrying, but 7 years later, what if these are all on electric bikes and not on petrol bikes? Will they make the change and will they transition to that? That's really the sort of bet you have to start thinking about.
So what do you worry about when it comes to autos in particular, for instance? Do you see that growth visibility, or do you worry about the prices that the stocks are trading at?
So the prices for autos are actually very interesting. The issue is, will they make the transition to the X sort of internal combustion engine era? And will the brand therefore be a lot more valuable than just what the technology is? And the bet so far is that People buy brands, not just the technology.
You know, we had this fund manager survey as well, and when it comes to earnings, the consensus call is that is going to take its own course irrespective of what happens with respect to the election. You agree with that? Yeah,
because if you just take the math for SBI, ICICI and Axis Bank, that itself is giving you 10% earnings growth for the whole index. So 50% of incremental earning growth for the Nifty is coming from financial sector.
The point which everybody is debating now is that what is, so HUL, Nestle, P&G, these companies will grow. 10 to 15% or 15 to 20%, that's debatable depending on the portfolio. But if you buy these stocks at 40, 50, even 70p multiples, what happens?
I can't disagree with that.
You can't. You'll agree with that. So you'll not buy.
When you play consumers, when you're looking for that J-curve delta, what you want is whether the beta is higher. Therefore, people go to durables and autos. Because if I'm going to trade up as a consumer from a Colgate, I will maybe go from a Colgate White to a Colgate Total. But it's not a fundamental change in trajectory. Whereas if it happens, the same consumer trades up from a bicycle to a motorcycle, there's 5 times the number of consumers which still have to come in there.
What is your view on the way how the NBFC messes? Because, you know, it's like opening or peeling up onion, layers and layers of mystery and and you know, stuff which we don't know. You think the adjustment is behind us or more is coming?
Look, I don't know what's inside, and Warren Buffett said it wonderfully in his 1992 letter that when he had bought Wells Fargo, he said, I don't know what is inside, and when you give money to someone who can then leverage it 10 times further, you don't bet on the balance sheet, you bet on the person you're giving the money to. And therefore, when you're talking of financials, you have to be clear who and what culture you're lending that money to or buying that equity.
So I'll tell our viewers what Manish Chokhani told me. Forget about Buffett. We love to quote Buffett. So I'll quote
in 92?
No, not 92. I never met him in 92. I know him. Actually know him from almost 20 years now. So that's a lot of history.
You guys are old. But anyway,
Okay.
And
thank you, Aisha.
In 2000, okay, this is 2003, 2004, we met on a different forum and you said, look, you know, I'm going to be betting on businesses which will be building the new India when India will move from $5 trillion to a $2 trillion economy.
Other way.
2 to 5. Sorry, 2 to 5 now, right? The other way now. 0.5, actually, it was 500 billion.
That's right.
So let's say if India has to go from 2 to 5, which are the businesses which will scale it up?
See, that's the issue, that if 40% of this market has become financials.
Okay.
We don't yet have the tailwind to say which are the guys who are going to take us to the 5 trillion. If you disaggregate our market and you take the 2 trillion, I'm just rounding off.
Of course.
25% of that market cap, 500 billion, is 6 companies. 18 companies is the next 25%. So in 23, 24 companies, half of India is over. In those, half of them are financials, some are tech, a few consumers. This cannot be the base to take this country from here to there. So if you even think of China, what lifted off that country was not the public sector, which largely owned the country. It was the Tencents and the Baidus and the Alibabas. Where are those companies being created? Because these are now held also by foreigners. So if Walmart holds Flipkart, Amazon is Amazon in India, and now Alibaba and SoftBank between them own Paytm, and they will try and create that. Where is the wealth creation happening for Indian entrepreneurs and Indian investors? And that's not really coming to market.
So what should one do in next 3 to 5 years?
So build your own business. You know, I'm involved in that. And
no, a lot of
I've asked my son that, see, when I started my life, my father was in industry, and if I said I'm going into the stock markets, there was kind of gloom, like, itna padha likha ke waste ho gaya. And now it's the reverse, that everyone and his uncle either wants to be a consultant or an investor. Who's actually going to go and build businesses? And those are the guys who are going to create the next level of wealth. So in a country which is young, we're 25, 27 average age, we should have a lot more entrepreneurs going out there and creating businesses and building jobs, and there is a lot of capital now available for everybody.
So let's try and analyze it this way. What will New India need? They'll need cars, they'll need insurance. What else?
I'm not sure they need cars, because now they do ride sharing. My own son refuses to buy a car.
Oh really? He's rather conscious.
So the world is changing, and therefore that's what I'm saying. The patterns that we are building on are linear, and the world has gone X-linear, and it's gone in a way, the word we use is exponential. And it is about a lot of the world may be living in a gaming universe, in a virtual reality universe. Everything is on tap and on a phone. That's right. So what is holding back Indians, who are fundamentally smart people, from creating these new models and testing? If you're saying I can do clinical trials in India because it's cheaper to do it in India than to do it in the West, a lot of these business models could be tested in India at much cheaper levels, and then you do the scale up overseas. And that's the sort of, one of the businesses I'm involved in is actually going down exactly that path. That you don't get pricing in India, but you get proof of concept here. And then you can scale it up dramatically. And that really was the success of Indian IT, Indian pharma, because they opened up global markets. Even our auto sector, for that matter, has gone global. It's not just about India. You just spoke about Bajaj Auto, for instance, when I came in. I think half his revenues are now overseas.
30%.
Yeah.
No, but for someone who says, look, I don't have the wisdom or the capital or maybe the understanding of starting a new business, but I don't mind putting 50,000, 25,000 on a monthly basis. The call which I need to take is that on a 3 to 5 year, do I remain committed to equities?
There's no question.
There's no question.
Absolutely. I mean, without question that if you're going to beat inflation in this country, you have to be in equities. You cannot be in fixed income.
The same set of...
what if this entire US corporate bubble is going to burst in the next 2 to 3 years?
Let's say US blows up, you get a meltdown in global markets. The question is, does India come back or no? Because the consumption is still there. So if you can take that temporary shock and your asset allocation is okay, hopefully when the meltdown happens, I can deploy some more money over there. It's only if you're levered 110, 120% in the market that you worry about blow-ups. But if you always have some gunpowder dry, you can always put incremental money. And in the Indian context, we don't even have 5% of our assets in equities. So the talk of what will happen when the world blows is a bit premature in our context. I wish more of Indians were invested in equity markets, because if 50% of India is owned by the owners of businesses, 20-25% is owned by foreigners. Where are the Indians in the ownership hierarchy? And a lot of the wealth, you take the top 6 companies which I said are all owned by foreigners. But whether it's SGFC Limited or Infosys or TCS, I mean, fortunately Tata's held on. Otherwise, all the ownership is overseas.
What the other trend is that big is getting bigger, and big ones are reaching monster levels. TCS, the biggest but the best growth. Bajaj Finance, the biggest but the best growth. Will we see more polarization where 5-10 companies will be the next one to survive, next one to take a big leak, and one needs to just keep it simple, stick to these 10 names?
So it's not you buy them when they are already that big. You hope that the one you buy has the characteristic to become that big person. And the most fertile shopping ground is for individual investors should be mid caps, but provided you understand. If you don't, mutual funds are there, and there are 2 already listed, and there are many more going to come.
So what would be the criteria then for these mid caps?
So do you have a very large addressable market? Do you have a player with whom you can bet? So Bajaj Finance, if I remember, was born in the global financial crisis.
2008, 2009.
It was a 500 rupee stock, and it's today effectively 68,000. That's the ride in 10 years which it's given you. Of course, everyone won't become that. But even within those spaces, there were other players who came out who've done equally well.
So in the near term, do you bet on those same leaders, Bajaj Finances, HDFC Banks?
I think I don't want to do individual stocks, and it's a question of valuation. And it's not right if someone is sitting on something from a very low price, he may just be holding on, till the very end. For someone to take fresh entry, we started by saying this market's not cheap. So you have to be cherry picking and figuring out where I want to take a 2-year, 3-year, 4-year view. And unfortunately, most people in India buy stocks, they'll buy it in May so that they can sell it by December. And life isn't so easy as that.
The first time I think I'm going to say today that don't sell in the month of May and go away because because of election.
Okay, you never know.
You never know. As of today. Okay, but before we wrap, one final question, and we'll not extend appointment beyond that. You are a big believer of cycles and mean reversion.
Right.
And just to put things context for our viewers here, not for you, just for our viewers here, is that let's say you bought into private banks in 2000, you hit a home run. You bought into the NBFC boom in 2010, 2011, you've hit a home run. What could be that trend in making within the financial where you think that, look, I see the size of the addressable market, the underlying growth, whether it's because of organized becoming unorganized or whether it's largely because of the market opening up. Next 5, 6, 7 years, what's that trend for you?
Look, the easiest one in financials today is the mutual fund space, because everyone is underinvested. There are 2 listed and a couple more indirectly listed in that space. But eventually the mutual fund has to become larger than the banking deposits in this country. There are 2 or 3 obvious winners in that. Even I should put a disclaimer, I own this, that Reliance itself is going to sell its mutual fund to Nippon Life.
It's public information.
It's public info. If you look at that, there could be directionally a trend line in something like that which changes. If HDFC mutual fund, like I said, if in the market correction you could get it at a reasonable price, why would you not own it for the next 10 years?
You would not buy life insurance or general insurance?
So there are prices for everything. So I love those businesses as well, and I do have a lot of those in my portfolio as well. And there are ways to play them. There's a player I have from South India, which looks to me terribly undervalued. But there is enough to do in the market. So I still repeat, the global setup is very scary. The Indian market is expensive, and yet I'm fully invested.
It's taken us 1 year to get you out of your shell. Should we book our next appointment?
She has me booked for Friday.
Yeah.
When we really know the numbers.
Yeah.
Okay, but hand on your heart. NDA 2, is this good news or is this great news for market?
I'm always optimistic. Right? So, look, it's how events unfold and what people do. Like I said, the last time I made such a bold statement saying the country decisively moved to the right, in fact, it really stayed on the right. Yeah. Even the CPM has voted now for BJP, so what more do you want?
Okay, good to have you, and we hope to see you again on 24th actually. 24th is when we meet again. Okay.
Great.